Yeah, I've been with AgriTrend for about 8 years here now. I was the original original market coach. Sorry, Rob Syke and I started up AgriTrend marketing about 7 years ago. So I work with my own clients still in the Moosomin area, but I do a lot of speaking and work with all the market coaches across Western Canada. So that's kind of what I've been doing the last little while here. So I'm here today to talk about soybeans and a little bit before we get into the actual soybean side of things, I want to talk about factors that are affecting the market today. And so we all know about supply and demand and how that works, and typically that's what's moves the market up and down is more supply, lower price, more demand, higher price, right? So but we're getting into a new age here now where we're getting into technicals and index funds, and there's lots of New York managed money that is moving the market up and down, whether it's corn or soybeans or wheat, especially corn those last few years. And so you've seen big swings in the market. So you see 20, 30 cent days up and down, and that's because of these index funds have billions of dollars invested that are watching charts and technicals that when the 100-day moving average and the 50-day moving average cross, we'll see a sell-off in soybeans or a sell-off in corn. Really no fundamental reason, but they'll beat the crap out of it, or vice versa. They'll run it up, and so we got to be aware of those things. There's billions of dollars in there now, as I mentioned. There's lots of that cash is, they trade about 20 million metric tons of contracts a month, right? So lots of dollars involved. So the supply in the last little while here, we've got 1.8 billion metric tons in 2001 to 2010. We've grown to 2.2 billion metric tons, so an increase of 22%. So huge supply, that's not going away. We got huge demand because of it. We need to grow another 29% over the next 8 years. So we're going to continue on the race or the pace that we're at to keep up with the demand that we've seen out of China and India. So total world production is 7 billion people. We're expected to go to 9 billion people in the next 35 years. So you can expect another 38% as China continues to grow. So there's no shortage of demand for our products. At kind of a current global S&D, the red line is the consumption and the production is the green line, and we bounce in and up and down with that. So GMOs and technology has allowed us to keep up with the current rate of demand. So a little bit on soybeans and current S&Ds. This is a U.S. S&D. Last year we were expected to have a pretty big drought in some of the North American states, and we did. The Corn Belt was averaged about 123 bushels of corn, when typically they're about 155. Trendline yields, they were expecting 163 bushels of corn, quite a bit down from what they expected. Soybeans were down as well. They weren't down as much. We averaged about 40 bushels an acre, 39.6, when typically they're 43, 44, in that range. So at the end of the day, there wasn't a big drop in soybeans. There was a lot more early in the year. If you remember, canola prices were reacting to soybean acres and to potential yield loss in soybeans. As the year turned out, they found some more soybeans that came kind of near the end. They grow like a pea. They'll keep on growing and they won't shut off as soon as maybe wheat or canola or other products like that. So that's why we got some high yields late in the year. But ending stocks are down from 215 million metric tons to 125. So we are down. Here's world soybean targets, so stocks to use ratio, same type of thing. We're from 28 to 23. So we're down quite a bit. But the reason that we're down the way we are in the world is South America had a poor crop. Argentina was probably about a 60% of average crop. Brazil was probably a 70% average crop. We were down there and saw, toured all that area, and they've never had a drought like that in 30 years. So that happens, then North America has somewhat of a drought. So we've never seen a back-to-back South American, North American drought in 100 years. So it props up soybean prices, props up canola prices, and away we go. You know, any kind of a corn, you know, got a corn problem, tight corn stalks, and that keeps prices higher. So you know, we can't. We're at a point here now where China balks at some of the pricing. You know, we get into that $15, $16 range for beans, and China starts buying, and we go back down to $14, and China starts buying again. So we've seen a range here, up and down, and so there's lines of support and lines of resistance here. Here's your support lines all the way through the line, but we can't really seem to break the $15 mark, is because China just stops buying. As soon as we get there, they'll come out with some kind of report that they've got stocks or something that'll cool off the market, and then they ratchet the price down, and then they'll start buying here again, and we go up the other way. So the pattern for the year. We've propped up there anything that we can, or that China can do to get that market down into the $12, $13 range. They're going to try to do that. And if they have any kind of bearish news, you know, good crops in South America, you know, good crop in North America, they're going to try to push that market lower because they're having a hard time paying for these products or resistant to it anyway.
How many days is that graph?
That goes right to today. That's today's April 8th today. It goes right back to, this is be harvest time. So you get the idea that, you know, I'll talk about this one here first. So the world is looking pretty comfortable right now with, you know, cooler, wetter weather relative, so there's no real concerns. South America has got a pretty good crop coming. They got some areas here in the northern part of Argentina that had some drier mid-season soybeans that maybe there's some troubles there. Some of this area here is a little bit too wet in Brazil, and so there's some quality problems there. But overall, they've got a pretty good crop in South America. They're about halfway done their harvest right now, and but they're starting to get some rain. So there's going to be some quality problems as they go. The biggest issue holding up prices right now, and it's that last dip was because of some of the logistics issues that they had in South America. There was 247 vessels sitting in to be loaded in the Paragana port, which is right here. 247 vessels. It was 6 million tons of soybeans that couldn't get out of the country because they were having some problems with logistics. There was China was sent all these vessels into South America because they, North America was running out of beans. The prices were too high, so they were sending everything at once into South America. So logjam, and they couldn't get the product out. They had to come back. China had to come back and buy in some North American soybeans to get their short-term coverage off. Beans went up $1 a bushel in about 10 days. So
That one guys were sitting in their trucks for 7 days waiting on the road.
yeah, exactly. Yeah, there was that, and they had some rain issues in there. And if you've ever been to Brazil, the roads are brutal. We think our roads are bad. The roads are bad, and they can't get from A to B hardly if it rains, right? And they've got just their soil is just like soup. So. Real logistic problems there, and so that's what's given us this last rally in soybeans. So that they're really affected by South America. The next part of the story is what's happening in the U.S. And this is the corn and soybean belt right here. Like this is primarily where all the corn is grown. The soybeans are over in here, and then it's through here. This is primarily wheat growing area into the west, but looking not too bad to start. They got, this is snow cover through here, and they've got the pressure of the drought has relieved itself a little bit, but there's still a long ways to go there. They need some pretty good weather to get 166 bushel corn and a 40 bushel or 43 bushel bean crop. So the first part of the story has been told here in South America. There's some quality issues, but then this is going to be the next issue to see if we can, what kind of a crop we can pull off in North America. So new crop prices for soybeans is about $1.75 under the November futures. So we're sitting at about $13.82 today. So quite an inverse for new crop, and that's just because of the things that I'm talking about here, that there's a bigger crop coming in South America, so the traders have got a fair inverse in from old crop to new crop. So November futures are trading at about 232 today, $1.75 under, you're looking at about 10.57 picked up at the yard. So, and this company is out of the States, Linear Grain out of the U.S. There's 2 or 3 companies in the States that will come up and buy it. You know, you're looking at a lot of freight. The other option is into Manitoba, and you're looking at a lot of freight there too. So we need to get some more processors in the area, and I'm sure as you guys grow some more beans, we'll see more processors. There are ways that guys can flip, or crushers can flip back and forth from canola to beans. So maybe that at some point here we may see some crushing in Yorkton or Clavette areas. Just to see if those guys want to take that on. But there's some changeover costs and things like that. But as we get more beans in the area, and we're seeing a lot more, this is a big area, or getting to see more here around here. Estevan, Weyburn, there's more and more soybeans down there. A few of my clients grew them last year and had a great year with them. So it can work out really well. Return per acres are really strong with cost of fertilizer being down. Got to watch, your costs, of course, but had a really good year. Net returns were in that $70, $80 an acre range, similar to, we're talking like 100 for canola and 50 to 60 for durum last year. So it's right in the mix of all the products out there. So an overview on soybeans, we're currently sitting at 1387, as I mentioned, on the May futures, with support and resistance. Like I showed on the chart there, we've been going between 14 and 15. As we broke below 14 after the USDA report there about 10 days ago, there was a poor corn number and things went with corn. We've broken that $14 support, and now that's the new support and resistance there at 13.58 and 14.37. So that's a range. It's going to be tough for it to break lower than 13.58. If I'll back up to this slide here. It's lots of support there. And so, if we broke through that, then we're going to go to another range. But if it holds here, it's going to come back up. And we've held here at 13, it was like 13.58, and now we're at 13.87. This is that bar. This is basically today's trade. So it's heading back the other way here. So we are heading back the other way. So that's support and resistance. Again, once we get up to 14.37, then it's going to have a hard time breaking through that. If we can break through that, we'll get back into that the next line of resistance is going to be in that $15 range. So a good time to know when to buy or when to hold is when we're on the bottom end of those troughs, and when we're in the top end of those troughs, we've got to look, that's when we've got to look to price it, because it has a hard time. China starts balking, starts going the other way. So if we can break through 14.37, get back up to a $15 number, which is very possible, then we can start looking at booking new crop, and you should be able to add another 50 or 60 cents onto the numbers that we were talking there, and in that $11 range.
Does China bring it in consistently all through the year?
No, they'll come in and out, and they'll wait for those opportunities. And like I was saying there, they'll try to. It's a poker game for them. They'll try to back off and look like they got enough canola and beans, soybeans and or oil seeds to last them, and then the next day they'll come in and buy 10 vessels, and then that rallies the price back up again, and then they'll come onto the market, and so it's a bit of a cat and mouse game there. Typically they buy about 50 million tons of beans a year, so out of the U.S. So I mean they're absolutely the biggest buyer. India being another big buyer, but those two economies are very important to soybeans and corn. Yep. Yeah, they crush, just about everything. So just the final U.S. soybean yield last year was better than first anticipated, so we can, that's part of the reason that we kind of cooled off as the year went along. Then we saw some demand here late in the year here, but increased domestic crush was strong. Exports are at record pace. So, despite being, pretty decent crop of soybeans, we've shipped so hard that they may be out in May, June here, depending on what happens. So if we see that, look out, that'll take us to that next level that we were talking about there in that $15 range. So talked about South American production, major drought last year, good crop this year. They got a decent crop, but they're going to have some good early harvest conditions, but getting rain now, and that's going to be some problems. There's rain on soybeans is never good. Like it downgrades fairly quickly. Talked about the congestions at the ports. So relatively, it's high prices relative to what we've seen over the years, but we see continued prices to continue. We're turning into a little bit of weather forecasters here now with what's happening in South America and what's happening in the U.S. So it's really important to see what happens in the next 30 to 60 days. Will really set the tone for soybeans and for the next year. So keep your ear to the ground on the weather side of things, and there's usually some kind of a weather problem someplace that keeps this market fairly strong. And like I said, demand is going to be very strong. So we need a lot of production to keep up with that. So any questions on soybeans? I've got some stuff on some canola and lentils here as well, but I thought I'd stop here and just see if there's any questions on beans before we move on.
The travels in Brazil, are they still expanding their acreage there by eliminating rainforest or the savanna area?
Yeah, no, they're still doing that. They're getting into some pretty poor land now. They're moving the rainforest out there, but the land they're into now is marginal at best. So what we did learn is that their technology is getting a lot better. They're getting to be pretty good at it, especially in Argentina. There's some pretty good growers down there, and they're pretty efficient. But so their yields aren't too bad. They're probably better than North America, mind you. They get twice the rain too. So, but yeah, they're going to be something to contend with. Absolutely, they're good growers, and yeah, you're right. There's more land all the time.
What do they rotate the beans with in Brazil?
Beans.
Yeah. Not even beans, snow, it's just beans.
Yeah, bean, corn, bean, wheat. A little bit of wheat, a little bit of corn, but not very much. It's 85% beans. And I thought there was more corn down there, but there's a lot. It's minimal on the corn side. So yeah, they got that disease thing figured out down there. Anything else on beans? Okay, I'll move on to canola. That's a shot at it in Australia, by the way. They'll grow it anywhere down there, but it's kind of we make fun of that picture a little bit because we've increased from 14 million acres to 21 million acres in the last 5 years, and we expect that to come off a little bit this year, like with some problems last year with some disease and heat at the wrong time, and guys just weren't happy with canola yields, and so we're thinking maybe 19 million acres this year. We may creep up to 19.5, just based. We've got some pretty good pricing for new crop now, and wheat is maybe lose some acres to that, or durum may. But really, this is an S&D going back to 2004 to 2013, and we roughly sit around 1.5 million tons of carryout to 2 million, 1.8 in 07. We get pretty tight here in these numbers here. Last year was pretty tight, and we're expected to go even tighter this year. So 834,000 tons of canola at the end of this year. So you can see why basis levels are going positive. In some anywhere close to a crusher, we're seeing some 20, 25 overs at times. We've cooled off a little bit from that now, but at times we're 25 over. If futures drop off again, we'll see basis levels come back up because they need the product. They got it sold out, and they got to have it. So we'll see some more over basis as we go here. That's kind of a shot of the year. It's paddled upstream to soybeans, which is rare. You don't usually see that, but it's because we're at such a low carryout number that we've seen that take off. Even when beans were going lower, it was fighting to go higher. So canola is very, very high demand, and it's really because of all the crush capacity that we have here now. We were, when we were 14 million acres, we were crushing about 4.5 million tons, and now we're 21 million acres. We're crushing about 9 million tons. So you can see how we've grown on the crush capacity in Canada, both North America, or both Saskatchewan and in the eastern part of the country as well. We've got some major crushers out there as well. So strong demand, continued strong demand there. So currently it's 636, and we would be at probably 650 numbers had it not been for the USDA report that came out last week that dropped corn, and they found an extra 10 million tons of corn, and they didn't adjust the wheat numbers accordingly. So we've seen corn drop off, soybeans drop off, and canola follow. So that's really why we've dropped off here. It's fighting back a little bit, but support's at 611 and resistance at 640. So if we can break higher than 640, we'll get back to the 660 numbers we were at here, a month and a half, 2 months ago. So yeah, I talked about the terrible yields in canola last year, and so we'll see that the rotations change a little bit. I'm sure guys will be looking for some other things like lentils or beans or something like that to be putting in to kind of get away out of that canola rotation. Talked about this disease pressure and drop in acres for 2013. So questions on canola? Pretty straightforward, lots of demand, stay strong. So look for new crop pricing. New crop pricing's in the, we're targeting $12.50 a bushel, and it'll hit that every once in a while. So if you got some new crop, just look to get some new crop sales in that $12.50 range. Pretty profitable using average crops or average yield at 32, but if it drops below that much, you got to be careful. So peas, how many guys go peas in the group? Okay, well I got lentils here after this. So, pea market's been steady all the way through the year. It hasn't really changed. Like you see corn and soybeans going up and down like we've seen there, but peas have been steady, $8.75 to $9 through the year. So, we were waiting for things to kind of heat up a little bit, but then India had a pretty good pigeon pea crop, and it kind of just wouldn't get over that $9 mark. So we've seen that $9 mark. We're in that $8.75 to $8.89 mark now, but just and don't see it changing a whole lot here. It's just kind of staying steady. So for next year, guys are looking at $8 for next year, which is we're not really crazy about $8 yet, but we're starting to look at we'll be looking at $8.50 to start pricing some. But these are prices here at the elevator today. $8.90, like I mentioned. Some lentil prices in there, 22 cents for large greens, 21 for twos, small greens at 23 cents, and reds at 25. We've seen a pretty good rally on reds. So, we're really this last rally has been on the red taking off and the large greens falling a little bit. So it was pretty quiet, pretty flat all the way through the year as well. And we thought we'd see a rally later in the year and did, but mostly on the red market and bumping things up. So because of that, we're going to see strong acres for red lentils. We're talking about red lentils in the northern states a little bit now. They're looking at red lentils in Alberta just for agronomic reasons with the technology of the Clearfield, and also a very strong green pea market. They're looking to see more green peas in the northern states and some in Alberta as well. Just anytime there's a good market like that, they'll chase it down, right? So you see $17 green peas and new crop at $11.50, they get pretty excited to start growing green peas. So we'll chase that and overproduce it, and yeah, you're right about that. Guys will find brown bag, or they'll how that goes is they'll try to find it and tuck it away. But so they'll oversupply that market. So if you're growing green peas, price the heck out of it at $11.50 and plan to sell the rest at $8.50. So we'll oversupply that. But the Indian crop is maybe not as good as we think. There's a lot of reporting that the Indian crop's strong, but we're thinking that it's a little bit poorer, and there's still opportunity there yet. So, but that being said, we're getting rid of some of the old crop lentils and looking to price new crop. So there's still some really good prices, good returns for lentils last year. We don't see a big run, maybe a little bit in the reds here yet, maybe at 25.5, but the large greens and the small greens are pretty quiet for the rest of the year. This is the biggest thing here in the next little while, and you guys are sitting okay here. There's some snow, but you get a little bit rollier land than these guys down south here, and lots of moisture down there. So there's, that's getting to be a real concern as, as the days tick by here, we're getting pretty wet, and so it's going to be a concern for lentils in the plains there a bit. So the other bullish piece here that we have is India extends ban on pulses. So they had these bans on exports last year, and they don't export a lot, so it's not huge numbers. But again, they're planning to continue that export ban on lentils, and so that should be keep things pretty strong here for Canadian lentils to compete with and sell into some of these other countries.
Sorry, what did you expect U.S. lentil acres to increase by?
Just back up to that slide. Oops, too far. Sorry. Right here. 2013 expected increase by 31%. 850,000 acres.
So you think that's mostly red acres?
That's a combination of red acres and green peas. So it's a pulse report that this is pulled from. So chasing markets, whether it's red lentils or greens, that are going to chase that. And so more pulses of some sort.
I came up in Montana on Saturday, Friday, and I witnessed 2 grass fires.
Is that right?
So it's not real wet there.
Yeah. Yeah. No, and that's right. And they had a pretty dry fall. So yeah, they got.
So they still have an LDP program on lentils?
Yeah.
You know what the support is on that?
I don't know the support in it. No, I don't off the top of my head. But yeah, they've supported pulses fairly well in LDP payments, and beans is one of them, right? So.
Hasn't helped us very much, has it?
No, it hasn't. And yeah, and typically whenever we see this kind of a swing, like it's they kind of get in and out of pulses, and whenever we see this kind of a swing, it's not real good for us here short term. But unless they have a problem, like you're saying, if it's dry or market's still pretty strong. Like India and China are pretty strong buyers, right? So I don't, I think it can absorb this. We're pretty bullish here new crop yet short term. So nothing flying on the radar that expects us to go lower than 21, 22 cents for large greens and 23.5 for reds for new crop. So, how are we doing for time, Rob? Do we got time for durum? You want to talk about durum a little bit?
Let's talk about durum.
Okay, sure. I'll spend a few minutes on durum. So, U.S. wheat and we're fairly tight on durum, but U.S. and world wheat stocks haven't changed a whole lot. We've come down a little bit. Yields are down off a little bit, and demand has been strong. But we got to remember there's 24 harvests of wheat a year, and 7 between now and July. There's going to be 7 harvests around the world. So we're always producing wheat, and so it's the only crop that we produce that much around the world that it can bounce back fairly quick on the demand or on the supply side. One thing that's been holding it back a little bit is the weekly sales have been down. They expected to get to those carryouts. We had to have pretty strong sales at 150 or 141,000 metric tons, and we've been bumping along about half of that. So our stocks are growing a little bit in the wheat. The world wheat stocks to use ratio is a little bit 30 to 26 because of that. Because of the harvest that I talked about there, we're producing it here as fast as we can move it out. So that it's in contrast to durum, and so durum S&D is very, very tight. So we had big stocks back in the 2006, 2007 timeframe, and we saw lower acres because of it. We were carrying over durum. Our lovely wheat board was carrying durum over for us, and now we're into that 20, got acres down, had a little bit of a couple good years of sales, and we're seeing 20 and 20% stocks to use ratio. So we're very tight versus wheat, and it's kind of a special crop. So we expect things to heat up here on durum here last part of this year. Italy is going to come in and buy some in June, July. Typically, that's when they buy. And if we see acres, we're expected acres to be down a little bit again in durum. So that'll have another tight year for durum here coming into next year.
They're having a good year in North Africa, right?
They are having a pretty good year in North Africa, yeah. They're big buyers though too, right? So Algeria and Morocco are slated to buy a bunch here in September, October timeframe. So they typically buy a fair bit from us, but the sales that we see on the books are probably about 150% of what their average is. So they're coming in to buy some as well. So their demand is strong.
So they budget their numbers?
Well, no, I think the global economy, you hear about, Europe and issues they're having there, but China's getting, instead of eating rice, they're eating more pastas, more wheats, more beef, those types of things. Africa's the same kind of thing. They're buying a little bit more pasta. They're raising their standards of living a little bit, and relative, and we're seeing that in commodity prices. So that U.S. has dropped off in maybe the leader in some of that, but China, India, and parts of Africa are coming around. So we just got to keep those European guys out of trouble, and things will be okay. So that's the flip side of that is Europe is constantly bailing out Portugal, Greece, and Cyprus and those countries, right? So it hits the news and kind of cools the markets off. But when they solve their problems, and hopefully the U.S. starting to come out of this a little bit, we should see things continue to be strong. And then there's North Korea, yeah. So we can talk about wheat spreads a little bit, and some of my thoughts there. I'm sure you guys have seen protein wheats come down a little bit this year, and not getting paid for spring wheats, and you see winter wheats and soft whites a little bit stronger. Ethanol wheat's very strong. Some problems in Europe and Russia and Ukraine last year, and that's made winter wheat very strong, and Chicago's followed it. So our spreads have tightened right in. We usually see about $1.25 a bushel, and we're at $7.90 to $7.11 here for Minneapolis to Chicago. So that's narrowed right in. So we expect that to narrow or to widen out again at some point. So we just need the world wheat to kind of sort itself out a little bit on the production side, and we'll see those protein premiums come back in again. Just a short term, a year, short term, a 6 to 8 month thing that we should see that come around here as we go. So we're at the bottom end of the line to support in wheat and durum here now. This is a Kansas City wheat chart. So we got support here, and we should be heading higher here. There's lots of think back to that wheat chart that I had there, or that wheat map. Sorry, we had there. There's still lots of eyes on Kansas, Oklahoma, Texas, Nebraska, lots of winter killed there, and there's some news starting to come out now that their crop isn't really rough. Well, it was really rough shape before, but it's they're more winter kill than just a dry condition. So they're talking about the fourth worst wheat conditions in those areas in the last 100 years. So that's that being said, 2011 was rated around the same, and they had a pretty good crop. So they need very, very good weather in the next 60 to 90 days to come out of the drought that they're in on the southwestern part of the U.S.
Do you see, like if it stays dry in that corn area, will they switch to wheat, those guys?
Yeah, they'll replant. Yeah, they'll replant out of wheat. If there's the winter kill, they'll replant into corn or beans.
No, like if the corn area stays dry, will they switch to wheat, those guys?
No, usually those guys aren't really wheat growers. They'll there's enough LDP payments that they'll stick with the corn and try to see what they get, and then the LDP payments that kick in, right? So they don't typically see them switch out of corn into wheat. Can't see it. They'll abandon acres. Like they're talking 99 million acres of corn next year. They had 97 last year. So they're trying to, they're dry. So they're planting everything now, and it's marginal land again. So we don't expect them to hold those trend line yields. Like we think that they're actually going to tail off because of the marginal land that's coming into play. So they're expecting 99 million acres and 163 bushel crop of corn. I mean, the odds of that happening, the stars have to align perfectly. So we're expecting more like 99 million acres of corn, but maybe a 152, 150 number, which keeps us tight still. And so we should have some pretty good, we have really good demand. We should have some pretty good numbers in corn, and it'll keep the market strong. So last thoughts on wheat here. So currently at $8 today, support at 740 and resistance at 816. And if we can get above that 816 market, it should go, or 816 mark, we should go to next line of resistance is at 850. So strong wheat, strong exports. Wheat board is kind of slow on the sign-up, so they changed their pools around a little bit. They've broken them down to 2 there now, and because they just weren't getting the volume that they wanted. They're having trouble with protein and selling that product into some of these markets, and they've got some excess costs there as well. Just with they're competing very heavily with the line companies, and they're having to pay for some of that elevation charges and the storage, and so they seem to be out of the market just a tad. So we expect those premiums to high quality wheat, like I mentioned, to return in the later part of this year. So any thoughts and questions on wheat?
We have unsold durum in the bin, don't panic.
No, don't panic here yet. Like I said, June, July, things should be coming around. That's typically when Italy comes in and buys. The cash price on durum hasn't changed a lot throughout the year. Like you see the futures go up and down, but the cash price is sitting around 850 throughout the year. We had a premium at 875 there for about a day and a half in November, if you guys remember that, and then we've sat around 835 until this last report here, and we're sitting at about $8 now. Like the spot bids are in that 885 or 785, but premiums out there, guys are paying. There's some triggered here the other day at $8. So it's a tight range. So I don't think we've missed a bunch by not selling it, and it's it's supported by that S&D. So whenever the futures do go lower, they come out with a bit of a basis change. It's a little bit hidden. It's not as transparent as your wheat basis is, but they'll come out with a basis change, and the cash price stays there pretty steady. So that tells me that things should be okay for durum here. If we ever did get a decent sale, we should see a bit of a jump.
So what about September, October contracts on durum?
Yeah, typically September, October contracts are tough to get on durum. It's usually, the guys, the traders don't typically like to hang their butts out too far in that time of the year. It's kind of a slow time for them for durum. They're competing with spring wheat to get it out of the ports, and so there's logistics problems at that time of the year. They'll typically look for a better basis in the November, December time frame, January even. I think that we'll see the basis be cut in half by then. So if you can sell something else to kind of cash flow until those times, you'll see better basis levels, for sure in durum, and hopefully the market stays there strong, and we should net out okay on the cash price.
So the board knows now that they got work for a living?
Yeah, absolutely. Those guys they're in tough shape. So
Hurt my feelings at all.
mine either.
They seem to be doing all right.
Well, okay. They're hanging around. I mean, they've started selling canola, so they're doing different things now. They're really more offshore buyers. So guys like Viterra or Cargill or Richardson will sell what they've procured in the country to the board for them to go off and sell it. So they're getting to be changing from a country buyer to an export sales guy. Right. So, and the only reason those guys are doing that is for cash flow reasons. Right. They're going to get paid in Vancouver as opposed to waiting another 90 days before somebody in Algeria pays them for durum or wheat, and so that's what they're just offloading their risk to the board. And so that's the piece of the pie that they're playing in now. They can't seem to get guys to sign up on contracts. I don't know why. But a little bit of a shot there. But they're having a hard time getting guys to sign up in the country because the Viterra guys or the Richardson guys are there offering them the price. They're going to pay them today, right? So the cash flow reasons, it's all that, right? So they're having trouble getting sign-ups, and so you can't really go off and sell it until they got some tons to sell, right? And so they're that's where they're working for a living now, is they go off and sell product because they knew they had all that product, knew that it had to be booked with them at the pool, but now they're having to you know, they can't go out and they're getting caught up, they can't go out and sell it until they got to buy it, and they can't give these guys a number until they go sell it. So they're kind of like every other trader going, what the hell do I do? And they don't do anything. So that's why they're just stuck, right? So that's why they're turning into these export buyers or export sellers, sorry. And
So do you have any idea what percentage they did get signed up in the pools that say you borrow it?
well, how many did it here? I mean, how many guys signed up there? There's your answer right there. There was.
Some areas there's like, I got some relatives that farm up by Aston, and there's lots of guys that are in the pool up there.
Is that right? I asked that question at most of these, and we've got 1,700 clients across Western Canada, and I think we got like 50 that signed up on the board, 50 out of 1,700. So that, you know, that's the kind of numbers that I use, and so, you know, guys are a little bit more progressive. You know, those are the guys that maybe are looking to market in other ways, and so you maybe have more signups in certain areas, but I would doubt it's 25%. You know, I was expecting maybe more like 50 or 60% first year and have it dwindle down, but even the numbers came in quite a bit lower than that. So
Yeah, I thought they might be 10%.
yeah, yeah, no, I think they're higher than that, but still, I mean, from them going to 100% of the management or selling that crop to even anywhere, anything south of 25 is a big change, right? So that's a huge change. Yep. So any other questions on, well, don't have to just wheat or soybeans or lentils, anything there before I wrap up?
You haven't really said anything on reds, have you?
Well, yeah, the red lentils I talked about there, we've had a pretty good run in red lentils. They're about 25 cents.
What do you
And
expect for happening with new crop? Like, there was some contracts out for 25 cent new crop lentils. Do you
Yeah.
think that's still there? Or is it-
yeah, we're pretty confident in reds going forward. So, like I was saying there, that there's going to be a lot of red lentils seeded in northern states and in Alberta. So we'd be looking to, they're going to beat it up a little bit. So they'll, once they get 25 booked, they'll start going to 24. They'll get that booked, they'll go to 23. So be on the front end of that if you're going to grow some reds. So the market's strong, but looks like there's going to be a fair bit of supply here with guys chasing the market.
How does Stats Canada get it so wrong again? They tell us all winter that there's lots and lots and lots of reds, and all of a sudden, boom, last month or 3 weeks, where did they go?
Yeah.
They do that all the time.
Yeah, no, that's right. It's no different than, the USD or StatsCan. They're missed it a little bit, and canola numbers are the same, right? So,
It's pretty well knew that they're,
yeah,
that there was a cost wasn't there, because a lot of that feed stuff got moved off into the feed market.
yeah, that's right. Yeah, well, they estimate the yields a little bit off, and then they extrapolate that, and so if they got it off by a couple bushel an acre, it adds up to big tons, and they just miss it, right? So, yeah, I would. Yeah. Our analysts, we watch that stuff as well, right? We started with a lower number. There was some concern because the sales didn't come early, and so that maybe that's, some analysts were saying that we're getting backed up a little bit, but then it picked up here about a couple months ago, and it started to, pretty brisk the last little while here. So, but had we seen some early better sales earlier, we would see 27, 28 cents now. We'd be out, right, and really scraping the bottom of the bins. But there's the sales at the beginning of the year were slow, and so it's backed us up a bit. But